Hang on here. We're going to talk today about how my SunnyBands indicator works with Fibonacci and Elliott. And I am not an Elliottian, although I might be a Fibonacci-ian, Fibonacci-ist, I don't know. Because my first master's thesis was supposed to be in Fibonacci numbers. And my passion is in helping beginners and intermediate traders. And that's what this talk is for, those who have not yet become wildly successful or who have not traded much and want to learn, and people who want to improve your trading results. I love to teach and mentor and consult. So my number's at the bottom of every one of these pages. If you want to give me a call, we can chat. I love to do that. And there's my phone number bigger. The disclaimer is that there is risk of loss in all trading. I am not a financial advisor, and none of this is meant as advice, and that hypothetical performance results are generally prepared with the benefit of hindsight, and that they don't have any bearing necessarily on future results. That's what I just said. Past performance is not a predictor of future results. So any risk, all investing involves risk of loss, and individual investments may vary. The examples provided in this talk may not be representative of typical results. So when your capital is at risk, you can lose some or all of your money. Never risk more than you can afford to lose. And I have a full disclosure on my website, or I will be posting the slides on my website, moneymentor.com. And if you want to see the slides, then all you have to do is be a free member, and you can download the slides and the other private information that's for members only. So I am a professional trader. I've been trading for 41 years. Tells you I'm 51, right? Not here. Why isn't there? I trade both futures and stocks. Primarily, I trade the S&P futures, but I do trade on a longer term basis. I trade stocks, but I do not trade options. Sorry, I just don't know how to do that. I'm going to tell you a little bit about myself, and I'm going to show you how I trade. So I've been trading since 1981 through all the decent crashes, short primarily through those, as well as the 38% COVID crash where I was also short. I do trade the S&P 500 futures contract on 1 minute and 5 minute charts. So I trade really fast. And there are those who say this is the most difficult market to trade, but it's the one I know. So I've been doing it for a long time. My long-term stock holdings typically are days to weeks, months, and I do have a little bit of cryptocurrency. But today I'm going to show you how I trade. SunnyBands, dynamic moving averages with Fibonacci and Elliott waves. Just the basic stuff though. You can get my free Sunday night Sunny Side of the Street newsletter by signing up on moneymentor.com. And I explain what all my indicators are telling me about several different markets. Email me if you can't find it. There's my email, sunny@moneymentor.com. And if you get the PDF, of course, you can click. There's my Sunny Side of the Street newsletter. I go into about 8 different markets, I think. And I always post the tomorrow's that comes out on Sunday night, so Monday, the Vantage Point prediction. So you can see that for free right on the front page of Money Mentor. Quickly, I was rated #1 commodity trading advisor twice by Stark Research, using both my SunnyBands and my dynamic moving average. And you see right there, Rourke International, my trading company, was #1. I grew up dirt poor in Appalachia. I have 3 degrees in mathematics and 1 in photography. I've been programming for 52 years and trading for 41. I was a systems programmer for Lockheed, the founder of ISCO, which was the world's leader in machine and device independent computer graphics software. I retired when I was 30, and I gave my millions to money managers, but They lost $75,000 in the first 3 weeks. And I decided I could do that badly on my own. So I started reading. And I spent the first year reading 117 trading and related books. And now I've read 745 of them, and I have them in my office, all of my trading books. I did not enter a single trade for the first year of watching the market. I just learned the rhythm and read the books. And I did publish a monthly magazine for 8 years called Trader's Catalog and Resource Guide, which was an interesting experiment. I've written 5 best-selling books. TradeStation Made Easy is the latest one, and I have my 6th one, which is really my 7th, coming out in about a month. Oh, and I also wrote Going Vegan with my friend Linda Blair. So now I'm finishing up Easy Language, Object-Oriented Programming Made Easy with Sam Tennis. I've written articles for all the major magazines, just giving you an idea of why I can talk to you about this stuff. So there are my book covers. I also wrote with Murray, God rest his soul, Murray Ruggiero, using Easy Language 9.x. And there's the magazine, and there's Going Vegan with Linda Blair. And here's the next one. You might want to read the quips and quotes on my website. Go to up here to quips, and you can see what everybody said about me ever, even the bad one. And I do have a Facebook page where I also post predictions. And you can go to Facebook for free predictions. You can get Sunny Side of the Street for free. And I have customers just about everywhere. So let's get down to it. How do you make a 6-figure income? Let's say you want to make $120,000 a year. That's a fairly decent salary. So if you divide that by 12 months, then you know that that's $10,000 a month. If you divide that by 20 days, 20 trading days in a month, that's just $500 a day. So if you break it down that way, it makes sense, and you can actually make that happen. Whereas if you say 120,000 a year, that's kind of nebulous. So it helps to have a daily goal. And that's just 5 trades of $100 each. That's all that is. And that would make a real good living. And I think a lot of people overtrade, which is why they get in there and do the revenge trading. I lost money, now I've got to make it back. The S&P usually has a spread that would equal $1,000 to about $3,500 per day potential, going both long and short, one contract. So that's a lot. If you could make $1,000 a day, you'd be $240,000 a year. So here's what the Dow Jones looks like, and that's just a chart, and it's kind of hard to say where that's going next. It looks like it's going down if that's what's all you're looking at. So how do you trade that? It doesn't tell you much. In fact, it kind of just looks scary. Is it going down further, or is it at a bottom and it's going to turn around? So the first thing I do is put a little right there. There's a little dot on my chart. That dot turns red if the last tick of the market went down, green if the tick goes up, and gray if the tick was sideways. So that's the first thing I put on my charts, because it's a lot easier watching that bouncing ball than it is trying to watch the wick of the candle. Then I had Fibonacci lines. Now it makes a lot more sense. Now it looks like we are going down to that 61.8 Fibonacci line. So I've spread this out so you could see that a little better. That's the same chart, just closer in. And you can see the 61.8 down there below. And, you know, also I put trend lines on things. You can see if you take the trend line from here to here, it's broken it. So that's another bad sign. I call all these things attractors. It's an object that attracts price to it. So there's trend lines, which I just mentioned. There's Fibonacci lines. There's Elliott count. There's support and resistance. Moving averages even. I call these things attractors because price tends to go for it. So I have three main indicators that I use. I'll show you several, but my primary indicator is SunnyBands, and it is based on a proprietary dynamic moving average histogram that I created the math for years ago. I've been using it for many years. And I invented it because most moving averages are just full of whipsaw. You get crossovers back and forth as the market moves sideways, and then you get a good trend. And then you get this whipsaw going back and forth again as the market changes direction a little bit. So I created a moving average that calculates its own lengths internal to the mathematics. So, I mean, like a standard moving average would have a 9 and an 18 for the two lengths. Mine might start the first bar at 9 and 18 and then change to 8 and 16 and then 10 and 17 or 20 or whatever. It changes with every bar. It changes the length of the average. And it bases that on the speed of the market. I have another indicator I call recession, which I wasn't putting on a chart until last January. And I'll show you all of these. So there's the Fibonacci, the channel, the SunnyBands. The SunnyBands are these green exterior lines. So there's a SunnyBand here that's green, one down here that's green. That's the outer, lower outer band that I'm tracing. This is the upper outer band, green one. The teal inside are excursion bands, and price will often go to that band and not go further, be repelled. So I watch those closely. And then I use my dynamic moving average histogram, which is the pretty color thing at the bottom, the vertical bars. And it tells me when the market turns. I can see when this thing turns that that's a good short right there. So these are the things that I use on my charts. And let's see what that is. That's the same thing spread out, but this time you see these two horizontal red lines. There's one right through here and another one right through here. That's the recession indicator. So the first red line up at this level is minus 10% from the all-time high. And this other red one is 20% down from the all-time high. So you can see that we got real close to that back in this area. And then we have done the little bounce up. And now are we going to go down and hit that 20% again? Don't know. So you can see something, or I can see something with those indicators on my chart. Whereas with we just looked at that first chart, I really can't tell much. So let's add some attractors, not just support and resistance. Trend lines are attractors. Recession indicators also an attractor. You can see that as people watch that thing looming below, they get scared and start selling. And sure enough, it does go there. Fibonacci lines are attractors. Elliott waves are attractors. They're all attractors to me. So let's go farther. First of all, I'm just going to let you know I am not an analytician. I'm a mathematician and a programmer and a photographer. So I think I can see patterns and numbers in charts. So let's take a look and see what I think I see. So this last little bit to me, and again, I'm not an Elliottian, but this looks like this could be 1, 2, 3, 4, 5, A, B, C, and then we've got more to trace down. So I do keep these counts on my chart. And then from Stephen Poser, we see that in an impulse move, the two non-extended waves tend to be about equal in size. The best measurement tool for equality for all but very minor cycles is percentage, not price points. If equality doesn't happen, a Fibonacci ratio between the two, say wave 5, 61.8% of wave 1 often occurs. The extended wave will tend to be at least 1.618 times the size of the non-extended waves. I have found that first you have to have a wave 1. You got to be able to count to 1. Everything else calculates off of that. So then you can calculate that wave 2 will be either 50, 61.8 or 76.4% of wave 1. I like to look at it this way because I can graph this out beforehand and see where it's going. Wave 3 then is 1.611 161.8 of wave 1. And wave 4 would be 23.6 or 38.2% of wave 3. Wave 5 would be equal to wave 1 or 61.8% of wave 1 plus wave 3. So you can put that in a spreadsheet and you can have numbers pop out at you. You can put it on a chart and the numbers will pop out at you. All you have to do is find the one. Now, what about Fibonacci? Let's talk about that a minute. Leonardo Pisano, named Fibonacci, which is son of Fibonacci, was an Italian mathematician born in Pisa in 1170. His father worked at a trading post in Bougia, which is now called Bougia, a Mediterranean port in northeastern Algeria. He studied math in Bougia, and during his extensive travels, he learned about the advantage of the Hindu Arabic numeral system. So he started using that. The Fibonacci sequence starts with, there's some argument, it either starts with 0 and 1 or 1 and 1. But each number, each subsequent number is the sum of the two prior numbers. So the sequence is 1, 1, 2, 3, and then the next is 2 plus 3 makes 5. 3 plus 5 is 8, and 5 plus 8 is 13, and from there you go on. It's the ratios, though, between these numbers that we as traders use. So here's the sequence in a spreadsheet for you. So you can see I've just done 1 plus 1 is 2, 1 plus 2 is 3 in the formula cells. And then if you take this column and you take the ratio of this number to this, or this number to this number, you get 2/3. And at the 3 to the 4, you get 0.75. The 4 to the 5 is 0.8. The point is, as you go down more and more numbers, this thing converges. So you can see from about row 14 in this spreadsheet that we hit 0.618 right about row 14, and it just got closer and closer and closer as it goes down. So I took the 1 and the 2 and got the 618. Now, the next ratio, 0.382, is derived by comparing N1 to N3. So if you take the 1 and the 3, you get 1/3. And that converges again, just like the other one, down to 3.382, because you see 9, 6, 5, etc. And the 0.236 is gotten from N1 to N4. So with this, we have 1 compared to 4, and then that converges to 0.236. And there's one more, 1.618. Where did that come from? Well, we're looking at 1 to 2, gives us 2. And that converges on 1.618. Okay, enough of the math. So let's look again at the chart and see what we see. We've got a 20% below, we've got a channel bounding it, and it sure looks like it's going to go down in here to that 618 line. I have another indicator called PHW, which stood for potential hourly wage, and those are the yellow dots that appear on all my charts. So we're going to talk about potential hourly wage just for a second here. The question is, can you make more money by trading than by working for an hourly wage? If you're giving all your money back to the market, you've got a negative hourly wage. If you're just breaking even, you've got a 0 hourly wage. So you want to know what your hourly wage is that you're going to be making trading. Otherwise, don't do it. So the dots show me the ideal turning points, but I know that we can't be perfect and we can't get all the tops and all the bottoms. So as a rule of thumb, I take 60% of the ideal, and that's what I call my PHW, 60% of the ideal turning points. Because we can get in late and we can get out late, and then we give away 20% on each of those. So here's what they look like. You can see that and those are all automated. It's called my PHW indicator, and it just puts these little yellow dots here. And you can see that these are all ideal trading points, not investing points on this one, but trading points. And I've still got the Fibonacci here. Still got the Fibonacci on there. and the SunnyBands, and the lower one is the DMAH, Dynamic Moving Average Histogram. So if we were just buying and holding the Dow Jones, for instance, we bought in 1932 and we sell at the end, we could make $31,255. That's buy and hold from 1932. That's with no reinvesting. But if we look at the PHW, which is 60% of the ideal again, on the same chart, we make $307,000, 31 or 307. So I make the case for trading instead of investing. That's quite a difference. So here's the same thing on Ethereum. We've got the SunnyBands, the dynamic moving average histogram, the recession indicator, but this one shows a minus 20% here at the top horizontal line. The one at the bottom is minus 70%. So we've got a little cryptocurrency problem. Now let's look at buy and hold versus trading a little bit. So you could have made with Ethereum $925 from the beginning of the chart to yesterday, $925 on buy and hold, or $33,000 trading it between those yellow dots, up and down, on a daily chart with one share, just one share. Let's look again at something else. We'll look at Tesla for a minute. You can see over on the right of the chart, it says BH equals ideal equals PHW equals. These numbers are all the calculation, the results of the calculations internally. So BH stands for buy and hold. Ideal is where if you could catch all the yellow dots. PHW is 60% of the ideal. Then it says there would be 176 trades and it gives you the date span. So you can turn those numbers off or on if you have the indicator. So this time for Tesla, the buy and hold was 268, trading was 1568. And of course, if you're making that kind of money, trading one share of stock, then you can buy 10 shares and make more. Or you could reinvest your trading results and compound hopefully that way. That's where we have to watch out for losses though. Same thing on the US bonds. We've got the same chart, different data coming out of it. It's way below its 20% recession line. And buy and hold on that was $94. Trading was $2,100 per share, again, per contract. So this is what an investor's chart would look like. And that's assuming that you knew somehow in 1982 to buy Apple for 12 cents and hold it for the next 40 years. So in order to find these entries, I look at my SunnyBands and the DMAH and my PHW indicators. Like I say, these are on every chart I look at. The SunnyBands are 1.2 and 2.0 average true ranges away from that dynamic moving average. And that's the dynamic moving average is what's special about the SunnyBands and that DMAH that you see on the bottom of my charts. They're not like Bollinger Bands. He uses standard deviations away from a moving average, and that tells the market where it should go. Well, I don't think you can tell the market where it should go, but you can ask it where it has been. And the standard moving average that's in the Bollinger Bands is the average with the most whipsaw. But my DMA is smooth and it dances seamlessly with the market. So that's the beauty of that one. So if we put simple moving averages on a chart right there, you can see, come on, oh, they're coming up. You see all these yellow arrows are pointing to whipsaw areas where the averages cross back and forth real quick. And simple moving averages are also late. They're plagued by that. So there, it's really hard to see, I guess, but the gold and purple lines in the middle, the thicker ones, those two lines are my dynamic moving average. Dynamic moving average. And this is just there so you can compare it to a simple moving average. And you can see during the crossovers, the DMA kind of spreads out. It gets further away so it avoids the whipsaw. Let's see if I can see another one of those. Well, over there, it's just getting started. But here it moves away as the simple moving average crosses back and forth. My DMA spreads out of the way and waits for a trend. So here you can see the dashed pink and baby blue lines. Those two you can see that's a simple moving average crossing back and forth. And the gold and purple lines are my DMA, and you can see it doesn't cross back and forth. So it's unique. Two things about it are unique. It's unlike anyone else's moving average. And I've had other people try to come up with things to put in TradeStation that they say are adaptive moving averages, or sometimes they even get bold and say dynamic, but they aren't. They don't do what this one does. So, and the key to it is that it calculates its own lengths dynamic. On top of that, the market moves about as much as it usually moves, which led me to use the average true range to measure how it usually moves. It's like inertia. Body at rest tends to stay at rest. Body in motion tends to stay in motion. So when the market is going up, and I use blue candles because my SunnyBands are green, then so here's the rules. These are the basic rules. When the market's going up on blue candles and gets above the upper outer band and turns red and dips below the upper outer band, so it's gone over it and now it's come back under it, that's when I go short. When the market's going down on red candles and it gets below the lower outer band and then turns back up and turns blue, I go long. That's about as simple as it is. I have a few more complex rules, but basically those are the SunnyBands rules. So let's look real quick at a trader's long and short trades. You see the yellow dots on Apple, and you can see the words telling you buy and holds $138. PHW is 334, 26 trades. And a swing trader's chart would be more trades in a market that's kind of going sideways, especially. Oh, and there's one more indicator on this chart. You see at the bottom, there's dark gold and then light gold and then light purple and dark purple. They're dots actually going across the bottom of the chart. That tells me at a real quick glance whether gold is on top in my DMA or whether purple is on top. And when it lightens the color like this, that means that the DMA is going flat. And there's some specific rules around flat that you would need to know. And a day trader's chart, now we've got it on a 15-minute chart, and you can see the trades happening there. I've got another indicator on this thing. See the gold and red, blue and red candles? That's the day session. And then this automatically colors the night session magenta and green, so I can see when the market starts trading in my time zone. So this keeps me from thinking, oh my gosh, that was flat. Well, that wasn't so flat. That was the night session. So about the same amount of time, you could make $168 per share as an investor. The trader made $299 per share, and the day trader made $610 per share. So if you'd started with 100 shares, that would have been $16,000 for the investor, $29,000 for the trader, and $61,000 for the day trader. So that's why I'm a proponent of trading. At a starting value of 47 cents in 1981, Apple, at its current price of $156, an investor made 399%, the trader made 635%, and the day trader made 1,200, almost 1,300%. So that's why I like to do that. So you might ask, is it possible? And the answer really is yes and no. You certainly can't catch all the moves. You can't get every one of those yellow dots. But according to my research, you can capture about 60% of the move. And that's what's reflected in the PHW. The PHW is the 60% number. The investor, however, must sit through long periods of scary negative markets. So that's what we're going through now, and everybody gets scared. But if you were following your rules, and my rules for me are my SunnyBands, then the only thing you can ask is not whether you had a bad trade or a good trade, but did you follow the system? So the traders can go short. Investors are holding through long, scary periods of negative markets. Let's look again at the Dow because it's reported daily on the news and we all relate to the numbers. If they report that the Dow is down 300, you know what that means. Whereas if I told you that the ES was down 38 points, what does that mean? Dow 300, we do know though. So it was down 10% and more from its high in the last few weeks. And in fact, last week it lost almost 1,000 points again. So we look at a daily chart of the Dow. And you can see this bottom indicator again is called who's on top. That shows me purple or gold's on top. Whereas it's kind of hard to see as the lines move closer together. The gold and purple in the middle of the SunnyBands gets real close together and it's hard to tell. But on who's on top at the bottom, it makes it real obvious. And I've got a pennant indicator on here too. I find that these pennants, the red lines form the top and the bottom of the pennant formation, which is a triangle, form great support and resistance lines. If you draw them on a cross, you'll find them hit over and over again. On the weekly chart, that's what the Dow looks like. This does not include today's session, however. And I have two more indicators on here, or one more indicator on here. It's three moving averages, 50, 21, and 200. Those are the standard moving averages that everybody talks about on the news, whether it's daily or weekly. They talk about those averages. And you can see at this point, I've got a less than symbol by each one of them, or by the 50 and the 21. That says that the price is currently less than those two moving averages. And yesterday's print, it was greater than the 200. So I know price is greater than 200 and less than the other two. So we're looking, I always look at Vantage Point software at night to see what they think it's going to do the next day. It's predictive, artificial intelligence, and it just gives me a perspective of where things are likely to go up or down for the next day. And they're not right all the time. They say that they're about 82%, and in my testing, I found that to be true. And so I post it daily on moneymentor.com. If you want to scroll down past the first half of the web page, you can see this. It's posted daily there for you to look at of the Dow. And I do look at it every night before I put away all my trading tools and get ready for the next day. And if you want to have free training from them, then you just click this link. So there is prediction for today. We kind of didn't, huh? So let's look at the standard moving averages that are quoted, the 21, 50, and 200 a little bit again. There you can see that initial chart that we had of the Dow, and you can see the three moving averages with less than, less than, and less than on them. So on the daily chart, I showed you the weekly one before, but on the daily chart, it's below all three. And I do have a scanner for that as well, so that if I can run a scan in TradeStation and find out all the stocks that are above all three moving averages. So that weeds out the last remaining of the bullish stocks. And I do report that in my Sunny Side of the Street every Sunday night. So let's look at SunnyBands and Fibonacci numbers. There we go. So we're back to the 618 down here at this. We've got a channel down there. We passed under the 50% and bounced back up yesterday at this level and went on down further. So that looks to me like that's a likely target. I don't short stocks. I buy and hold after a buy signal, and I wait for a sell signal on the SunnyBands to take the profit. So the next chart tells me, I already showed you that, and whether my DMA is bullish or bearish, and what the potential profit is. And maybe that chart will come up in a minute. So I'm looking for all stocks that are above those averages. There we go. And this is a radar screen, which means it's like an Excel spreadsheet, and it quotes all the prices and all that stuff for you. And then this SJH_R moving average 3 lines, if those are almost all red, which tells me that all three prices are under all three of those averages. Here's one with two greens saying that the 50 and the 200 are still positive, but it dipped below the 21. And then over on the right, you see a yellow column that says PHW total. You can double click on this and sort by it and find all those symbols that have the highest potential hourly wage and trade only those with the highest PHW. That's what I certainly do. So we screen for high performers. We're looking for all that are still bullish. I told you about the scanner. And as of last night, it had 190 stocks out of 3,600. Only 190 left that were above all three moving averages. Week before, I think it was 358. So it's going down. And there's my website. If you'd like to come visit me, my phone number is right on top. I don't mind phone calls at all. In fact, I really relish the time to talk with traders. And everything that I have, indicator-wise, I've programmed it for myself. It's for my use in my own trading. But then I make it available to you because I find them so useful. And I want to see you make money too. And I show you for free exactly how I use them on your computer. I'll install them on your computer for you and show you how to use them. You can go to the order form on MoneyMentor.com if you'd like to order something, or look at products on MoneyMentor.com. Go to products and you can look at all the pretty pictures of all the different indicators. And I don't hold anything back. I mean, some of the gurus out there will say, I'm going to tell you exactly how I trade, and then they tell you like the first 10% and keep back all the good information. I don't hold anything back. I'll tell you everything. And I'll train you to use them for free. And I have a free trial. If you want a 7-day free trial, get in touch with me. And you can have a 7-day free trial of any of my indicators. So I also, if you're a member of Money Mentor, free member, then in January, I did a 4-week strategy forum, trading forum. The slides and video are posted on my website and under the membership pages. In April, I did a technical analysis forum, and it's not too late. You can still access the slides and videos for free. In July, I did one that's not free, the Easy Language Forum. It's only $79.95 for all 5 sessions, slides, and videos if you want to learn easy language. And they're all available on MoneyMentor.com. So I'm going to make an offer today, and I don't usually do this. I don't usually give discounts, but I'm offering education, consulting, mentoring, and easy language programming services at a discount today. I have a complete bookstore. If you go to books on Money Mentor, you can order your books right there. I've got a distance learning course, Solving the Puzzle. And again, these indicators are the ones that I use myself in my own trading. And the Sunny Side of the Street newsletter on Sunday nights. You can sign up for free for that. And here's the deal. I'm going to give 30% off of all my indicators and mentoring for the next week. So if you get before the week's out, if you order anything, it'll be 30% off. Or if you wait till the end of the month, then I'll extend 15% through the rest of that time. And again, if you want a free 7-day trial of any of my indicators, either call me at this red number or email me at the teal number, sunny@moneymentor.com. Are there any questions? I don't have anything for Thinkorswim. I'm sorry at this time. Is this live? Yes, it is. Oh, someone would like for me to talk about the recession indicator a little more. It's done with object-oriented easy language, and it calculates the highest high on the chart, and then it marks from that highest high down 10% and draws a horizontal line. And then, well, and these are inputs. It doesn't have to be 10%, but my inputs to them are 10% and 20%. And you can change that at will. And that way you can get 2 horizontal lines on your chart that go from the highest high to the current price. Thank you for your contribution. Somebody had to go. SunnyBands standard deviations? No, SunnyBands is my dynamic moving average, not standard deviations at all. That's what Bollinger uses, but I do not. I use average true ranges. $500 a day at 1% risk. Am I saying that we need $50,000 to trade? Well, that's what I started trading with because I like to have double the margin in my account and even more padding to trade one contract. I don't like it unless I have at least $35,000 in there. So 50 is a good account. My favorite author. Oh my gosh. I don't know. I read so many historical novels. I'm not sure. Although I did read a good one by, I'm not going to be able to remember it. I'll get back to you on that. Send me an email. I'll tell you once I figure it out. Okay. Very interesting. Thank you. Any more questions? Okay, here's one. Do I understand this correctly? You may buy your indicators and you teach us how to use them. Absolutely, yes. That's exactly right. And how much do I allow your profit and loss to fluctuate? Oh, well, mine doesn't fluctuate too much anymore, but I've been, like I said, I've been trading for 41 years. So all systems, all strategies, all indicators will bring you into drawdown. Everybody has drawdown. In 41 years, I've had 2 losing years. I didn't make anything at all that year. I lost money. I lost 10% in the crash of the .coms, which is not bad considering that the market was down a whole lot more than that. The link to the easy language offer for $79.95 is you go to moneymentor.com and click on order form. And then you scroll down a little bit on the order form and it'll be right there. The platforms these work on are multi-charts and TradeStation at this time. I'm trying to get a NinjaTrader version, but it's going to be a while. So yeah, you would need TradeStation or multi-charts to use these indicators. What is trading author? Oh, my favorite trading author would be John Murphy. If I don't have a $50,000 account and I'm new, I'm not ready to use your system. No, that's not true because you could have a $5,000 account and trade the MNQs or the MESs, trade the micro contracts. That's the best way to learn anyway. The first way to learn is to use the simulator. Don't ever trade with real money to begin with. So you start with the simulator and then you have to realize that that's not like real money trading is. And then you have to go into something live. And the best thing to do for something live at that point is definitely the micros. Thank you. Yes, I tend to be straightforward, don't I? I'm familiar with Elliott, but I'm not an Elliottian. Why not? Because I found something that works for me. The SunnyBands work. I've been using them for 35 years. And I base all my work off of my SunnyBands indicator. So I think if you want to be an Elliottician like Michael, you really need to study it and study it and study it. And I don't have the patience to do that. I study math. You know, I like numbers that I can add and subtract and make ratios with and things like that, which you can do with Elliott too, but I just didn't specialize in that one. All right, let me bring up my sign-off information so I can show you once again. Thank you, everybody, for attending, and thank you, David and Anka. And here's my contact information. I think that's it. There we go. As an investor, I hold performance stocks for 12 months with 20% stop. I hold quality stocks for longer, so your investor versus trader does not stack up for me. However, love your structured approach and expertise. Thank you. Yeah, if you held performance stocks for 6 months and traded them for 1 month and back up to another 5 months, then you'd be a trader. And I will post the PDF. You just need to sign up at moneymentor.com to be a free member. I'm not a statistician. I'm a pure mathematician. I have a bachelor's, master's, and PhD in mathematics. All right, thank you. Appreciate it, David.